Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Wednesday, January the 6th. The year's 2021. Let's talk trading. Knockdown versus knocked out, part 3 with Walmal. And as you know, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. Walmal. So, part 3, knockdown versus knocked out. Let's see, what else? We said, there was something else we had left off with yesterday. I'm trying to remember.
I think where I had gone and was where I was going, basically talking about is just this whole idea that just making sure. I'm going to sneeze. I'm so sorry.
Oh, but, by the way, the pound's back at 90, and you had called 93 a couple hours ago. So let's see.
I did. It got up to 90, but it never quite made it to 93. We'll see if it gets to 93 this time.
Yeah, I've got 91.9 on mine.
Yeah, but I think yesterday I was talking about this. In fact, in all of these videos, we've really talked about this whole idea of making sure that you still can get up off the mat. You get knocked down using that. This whole idea of sports and boxing or whatever. The whole idea of you can get knocked down. There are lots of great boxers out there that take a hit, take a punch, and go down to the mat and turn around and actually win the match.
Yeah,
that's okay. It's just that. Do you put yourself in a position where you can get up off the mat? It's okay to take losses. It's okay. I was talking to a trader not too long ago where, and it was just this whole idea. It's, he likes to go and say, I'm taking too many L's. And it's like, no. The thing is, you can take some L's. The question is, are you taking L's that you can go and survive, or are you taking L's that are putting you and your account into jeopardy? And that's for me, that's everything about, knocked down in a war versus being knocked out. Because if you take so many L's where, you just can't recover from it, then you're done. It's a done deal.
Well, I was going to say, let's explore that. Let's just say, somebody has $1,000 account. Okay. So, what would you call a knockdown?
Well, a knockdown is you got $1,000 account. And for me personally, with the way I trade, and because now I will admit I'm very aggressive. Okay, I'm very aggressive with how many lots I put on, and how much risk I'm willing to go and take. And the reason why I'm very aggressive is because I win about somewhere between 87 and 93% of my trades. So I can be more aggressive than somebody else. Depending on your method, there are a lot of methods out there people make a lot of money on where they're only winning 52, 53% of the time. Las Vegas does that really well, right?
Right.
But, but the thing is with my trading and with my style of trading, I'm going to win 92, 93, percent of the time, as low as on a bad week, 87% of the time. So for me, I can go and trade more aggressively because I know I can go and make it up. So what I generally like to do because of my style of trading is I trade one lot, okay, for every $1,000 I have in my account. And I have a 10-pip loss. 93,
just so you know. So your prediction came out.
It happened, yeah. But so what that basically means is that if I take a one lot loss, okay, on 10 pips, how much is that? That's one lot or $10, and then we have 10 pips. So that's $100. So I'm talking about on a $1,000 account, that's a 1% loss.
That's 10% loss.
10% loss. I'm sorry. Yes. So that's a 10% loss. I'm willing to take that risk, because of what I've been able to go and show. Now, would I recommend that for most traders? Absolutely not. So I'm not, so for me, a knockdown is taking a 10% loss. In fact, for me, going and taking 2 or 3 of those, where I'm down 30% for the account size, for the day, that's pretty significant for me, but I'm okay still. I'm not worried about it because I know that it'll come back. Even if I don't make it back that day, I'll make it back the next day. Because if I'm winning, 93% of the time, and let's say I'm winning 93% of the time, and I'm getting 3 pips. Let's just go and say getting 3 pips. Okay, and you figure that out, and it doesn't take too long for you to go and make up that 30% loss. Now, I'm not going to say how many trades, I don't have a calculator in front of me, but it doesn't take that much long. Let's say we took we actually went and knocked the account down 30 pips. Okay, if I'm making 3 pips each time, that means I would have to win 10 times. Well, if I'm winning 93% of the time, that means if I take one loss, in that, and take 9 wins in a row, just hypothetically, so that it's no big deal. So I'll have to do one more round like that, and so halfway through, the next round of 10 trades, I'll be where I need to be.
Yeah, because
so
you make 27 pips versus losing 10.
Exactly. So I'm up 17 pips, and my goal for the day is how much? 10 pips. Right. So I'm actually 7 pips ahead of the game. So it's, for me, it's not a bad thing. Now, here's the thing. Here's the caveat with all that. Everybody, I don't care who you are, you need to sit down and figure that out if that works for you or not. It works for me. It doesn't mess with my head. That doesn't mess with my head. Just like, if I get into a trade and I take a 3-pip win or a 4-pip win or a 5-pip win, and it rockets up 20 or 30 pips, I don't get mad. I don't get upset. I don't get frustrated. It really doesn't affect me. I'm okay with that. I know some people will get really, really upset with that and say, you left all those pips on the table. Look how much more money you could have made. You're right. Look how much more money you could make. But I also guarantee that if I was trying to stick in for that 20 or 30 pip move every time, what would happen is my win rate of 93% would plummet down to maybe 50%. Potentially even 49 or 48%, and I just don't want to go there. I know traders who are only winning 30% of the time, and they're very, very successful. Why? Because they're sitting there winning 30% of the time, and they're taking 20, 30, 40 pips, and their stop loss is somewhere at 10 or 15 pips. So they're able to sustain that type of a loss. I can't. That's what messes with my head. If I'm taking a lot of losses, that messes with my way of thinking. So that's what will knock me out personally. And I think that's an important point, TRO. I think that we really need to go and talk about a little bit is you got to know yourself, because there are things that will go and really rattle my cage and knock me out almost to the point of knock me down almost to the point of which of knocking me out. That, for instance, may not affect you, may not affect another trader, but for me, they're devastating. And so we need to go and know yourself so that you know what those things are. And then once you know what those things are, you need to start writing them into your trading plan so that you can take advantage of it.
Well, it's kind of interesting you said that, because I know when we were trading before the video, you were up a couple of pips, you didn't take it, and then you wound up taking, a 3-pip loss or something, and you were really ticked.
I was ticked off. Yeah, I was, and the reason why was because I violated my trading plan. I violated it on 2 accounts. The first account was I don't like trading after 11 o'clock in the morning, Eastern Standard Time. I just don't like to do it. I do it, but I just don't like to do it. So I really shouldn't have been trading in the first place. So mistake number 1. Mistake number 2 was I was up. Okay, and I was up a couple of pips. I should have gotten out of the trade. My trading plan says, hey, okay, price goes up, I'm in profit, price stops, it's now not moving anywhere. I realize that it's probably taking a breath, and there's a good chance when it takes a breath, it can continue going up. But if it stops, my trading plan says, get out. Take your pip, take your 2 pips, take your 3 pips, just get out, okay? And that's that. What did I do? I did not do that. I just, for whatever reason, I slept. I fell asleep at the wheel, as the old album used to go. And what happened was it turned around, and the next thing you know, I'm now down -3. And so in that situation with that type of trading, I'm just out. I take a -3, and we're done. But the thing is, I was really, really hacked, because I should have been walking away with 2 or 3 pips in the bank. Instead, I'm walking away with having to give away 2 or 3 pips.
And that's not conducive.
No, it's not. And the thing is, what's really bad about that, for me anyway, is, if I take a loss because the market just goes against me, but I follow my trading plan, I hate, people are probably gonna think I'm crazy, whatever. But I'm happy as a lark. I don't care. Doesn't make any difference to me. I did what I was supposed to do. That's trading. I know you used to say that all the time, and I think I mentioned it yesterday as well in the video. But that's just trading. Trades are gonna go against you. You're gonna take some losses. You may take 2 losses in a row, 3, 4. I win 87 to 93% of the time, and I've had as many as 3, 4 losses in a row. Just like everybody else, it just happens. Okay, that's just part of trading. You live with it. As long as you follow your rules, it's okay. The problem is, for me anyway, is when I don't follow the rules. Then what happens is I start second-guessing myself. Why am I breaking the rules? And then the next thing you know, I've actually missed the next opportunity, which could have paid off big. You start doing all those things, and then, instead of being able to make up for it, you wind up actually, not getting back in on a trade that you should have been able to get back in and actually made up for that loss. And that's why it's so important. I know you talk a lot about this whole idea that you make a mistake. You go and mess up, and when you mess up, things tend to happen in bunches. You make a mistake, and then you put yourself into a position, and then what happens is you go and make yourself another mistake, and now you get 2 mistakes in a row. Now you start self-doubting. What am I doing? Why am I even doing this? Should I even be trading? Do I need to go find something else to go and do? And then you make a third mistake. And they start to mount up, and in that situation, for me anyway, what do? I go outside. I take a walk around the property, go outside, get my head cleared out, come back into the game, because it's sort of like, what if you think about it, in a boxing match, a boxer gets knocked down to the mat, okay, and they do a count on him, okay, and he gets up, after, a count of 2 or 3. What do? Well, that fighter walks over to his corner. Why? So that his ring manager there can go and just sit there. His cornerman can sit there and make sure he's okay, and let the fight continue. He's talking to him, paying attention to him, getting his head back into the game, so that he's able to go back into that fight. Well, trading is a fight, So what are you going to do to get yourself back into the game?
Are you asking me?
Yeah.
Oh.
I am.
Oh, I thought that was a rhetorical question and you were going to answer it. What do you do to get back in the game? You get back to the basics. It's like whatever your plan was, you go back to it.
Exactly right. Go back to your trading plan. That's what you got to do. Clear your head, realize, draw a line in the sand and say, hey, I got a new starting point. In the beginning, when I was having a lot of problems and I was just first learning how to trade, and you'd have days where it just, at first it seems like you either win a bunch and then you start your losing streak, or you wind up doing this up and down thing. For me anyway, it was an up and down thing for a while. And what I did was I would go and, okay, I got myself into a mess. I draw a line on the page and say, okay, here's my new starting point. Okay, here's my new starting point, and let's see if I can be successful for the rest of the day, for the rest of the trading day. And if I was, I count that as a win. And then go into the next day and just keep on mounting on it. That's what I did. That's what helped me, was because I just kept on drawing a line in the sand. But here's the thing. If you don't go and keep your losses at a minimum, you can't draw too many lines in the sand, because then you run out of capital.
Yeah. Hey, we've got a situation here. Maybe you can tell the boys and girls and non-binary traders in about 15 seconds. You got the breakout at 95.3, the H1, and the Walmal line at 90. It's already touched that high twice. Would you take that trade? Yes or no?
Let me look. Let me look at the chart real quick. Yeah, probably would take the trade.
Okay.
Because we're only 5-6 minutes into the trade, into the hour.
Okay. I was going to say, the fastest 15 minutes in trading is up. So we'll come back and we'll do some more of those trades, look at some of these trades in future videos. In the meantime, it's okay to get knocked down. Just don't get knocked out, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.